Hello everyone, welcome to Everyone's Table. I am CA Vivek Rajan. This is the part 2 video of the Union Budget 2026. In the end of part 1 video, we said that there is a massive opportunity, massive tax incentive for a foreign company that is going to be engaged in rendering cloud services through data centers up to 2047. In this video, we will take a deep dive into all these provisions plus another connected beautiful provisions whereby if you are part of a multinational group or if you are going to be a startup, and you can use this as an excellent business opportunity. So let's go into the video. If you are a multinational group that is involved in the information technology field, if you are a startup who is in the business of information technology and artificial intelligence, or if you are a person having large parts of land nearby coastal areas, or if you are a person who is engaged in the business of purchase and distribution and sales of mobile phones, electronics, computers, laptops and everything, well, this video, it is for you. Investment in data centers is set to increase from rupees 5.81 lakh crore to rupees 16.6 lakh crores. Yes, you heard me right, it is an astounding number. So what is this amendment? The central government has given tax holidays to foreign companies engaged in cloud service activities through data centers in India. The following are the conditions subject to which this tax holiday is available. Point number 1. The foreign company must get the recognition of the Ministry of Information Technology. The services should be through a data center that is located in India. The services should be an Indian reseller entity through an Indian connection which renders this data center services, and it should be subject to such other conditions that the Ministry of IT would levy. And if all these conditions are satisfied, then the foreign company is eligible for a tax holiday up to 2047. So what is a data center service? Data center service is, in short, processing of huge tons of data, storage of data, distribution of data, processing of data. These are the three key terms that involves data center operations. And as many of you would know, having a data center operation means it's a large capital intensive project. You should have massive amount of land, massive amount of servers, and the quickness in generating the data would lead to significant heat of the processors, and to cool down the processors you require water and all the connected resources. So this involves massive outlay of resources. In this following table, we have enlisted the different types of scenarios and the different tax implications that arise in this regard. The tax implications for the Ireland company and the Indian company is shown separately. If the data center services is rendered to the Indian and global clients by the Ireland company, then in that case, the global income is exempt from tax by virtue of this tax holiday. However, if the same data center services to Indian and global clients is rendered by the Indian company, then that domestic income and the export income is taxable. Scenario number 2. Research and development services to XYZ Ireland. Since it is rendered to XYZ Ireland, tax implications for XYZ Ireland does not arise. However, this is a taxable transaction for the Indian company. Why I have given this scenario? For semiconductors, NVIDIA is one of the leading companies engaged in the supply of semiconductors. Companies like NVIDIA have a back office in India that is rendering research and development services to NVIDIA USA. The point to note is that for XYZ India Limited, this transaction, it's not only taxable, the implications of transfer pricing arise, and if the implications of transfer pricing arise, safe harbor rules at some stage also applies. Now it is the time to flip the coin and see what is the major amendment in addition to this that is a game-changing one. The safe harbor rules has been in the Income Tax Act for quite some time. In this budget, the central government has increased the turnover limit from INR 300 crores to 2000 crores as regards to the safe harbor rules, coupled with a 15% markup on cost for companies engaged in services of data centers connected to this amendment. So how this amendment is connected to this? Again, with an example I will tell you. In the past 2 years, the advent of GCCs, Global Capability Centers, are increasing in India. Global Capability Center is a strategic unit that supports an organization's global operations through technology, talent, and innovation. Global Capability Centers in India are multinational company hubs for skilled work evolving from basic BPO operations to high value functions like artificial intelligence, research and development, cloud computing, with major clusters in Bengaluru, Hyderabad, NCR, Pune, and Chennai. As on December 2025, in India, we had 1,800 global capability centers, and in Chennai alone, we had nearly 300 centers. This number is set to increase. Semiconductors is an essential item not only for your smartphones but also for all the smart devices, including electronic cars. So, companies who are engaged in the business of providing data center services, companies engaged in the business of cloud service activities, companies engaged in the business of production of semiconductors in the entire ecosystem connected with the semiconductors, if they are part of this GCCs, thanks to their being part of their GCCs and to their multinational support, they can easily have a turnover of 500 to rupees 1000 crores thanks to all these reasons. So, if you are a company in any of this criteria, you are eligible for this safe harbor rules of 2000 crores. This is a win-win situation for both the Indian company and also the parent company outside India. The Indian company, it is safeguarded from the transfer pricing litigations by virtue of this enhanced safe harbor rules. The parent company is also given a tax holiday till 2047. So, if you are part of a multinational group, these two amendments will definitely help you to enhance your Indian operations, contribute to the Make in India initiative, and also helps in managing your profits. The Reliance Group, the Adani Group, Google, they are planning to have data centers in India. In February 2026, our Prime Minister inaugurated the chipmaker Micron Technologies 22,500 crore semiconductor facility in the state of Gujarat. The central government's budget extends supports to 7 major industries that is enlisted in your screen. All these industries are very, very crucial industries, and this is pointing towards the Make in India objective. The following are the industries: technology, manufacturing and electronic components, semiconductors, bio, pharma, Shakti initiative, chemical sector development, construction and infrastructure equipment manufacturing, rare earth minerals strategy, container manufacturing, national fiber scheme. For all these 7 industries, the underlying data is the biggest asset, and this data has to travel at such quick speed for taking business decisions. So in future, all these 7 industries will flourish, and along with this, the requirement for data centers, the requirement for semiconductors, and all the connected part of this ecosystem, it is also going to flourish. So please be a part of this entire ecosystem so that you can also capitalize in this development. If you like this video, please like, share and subscribe. I would like to end this video with a question. So, how many of you feel that this amendment is well connected to the Vodafone case of 2012? Please do drop in a comment. Thank you very much for watching.